Good afternoon, everybody. It is that time of the week again. It is another time for a Black Box Beat. Hopefully, everyone is doing well today. And let's go ahead and get this started. I'm Kane.
I'm Maria.
And I'm Hells.
All right, y'all, let's get right on into it. So, we had the Fed today. Oh, man, so much stuff going on this week. We had CPI, we had PPI, we had the Fed today. I mean, it's kind of like take your pick of all the stuff that's going on. So, let's get right to it. What do y'all want to start off with?
Why don't you recap us? Why don't you tell us what the man had to say?
You didn't watch it?
Huh? Yeah, I did. I most
Go ahead.
certainly did.
Go ahead, Hells.
Look, I don't know that I have anything really to say because he really didn't say anything. It's like you had a moment to where he literally tried his best to talk out of both sides of his mouth. It's like I want to come through and be hawkish, but yet the tone is extraordinarily dovish. And for reasons why he wouldn't go into any real details other than saying, "Hey, it is what it is. We are where we are. This is what it's going to be. Deal with it," and then walked off the stage. Ignored some really big pieces. It's like, and I'll just say this: I wish for once he would actually talk to the American people when he talks about the labor market. I wish he would talk to them when he talks to wages, as far as needing to get wages under control. I really wish he would talk about things that actually impact inflation, like point blank, like things like artificial intelligence, that the market is all obviously buying as far as being the number one catalyst as far as improving margins globally. So he's not going to talk to the American people. He's not going to talk to the markets. What the hell is he doing up there? What's he doing? Who's he talking to? That was a question. Anybody have an answer?
No. You can't tell by the blank look on my face. I don't know.
It's like, who are you talking to, buddy? What are you doing? What's the point?
I think for me, it was just interesting. I mean, the Fed Fund futures were pricing in a 92%, chance of a pause. So for me, it wasn't necessarily, too surprising that they paused today. We've seen during this rate hiking cycle where Powell really and the FOMC really haven't, had it in them to surprise markets. So I'm really not surprised there. One thing that I was surprised though about is that I think looking at Fed funds futures, there was the, okay, we're going to pause now, but there was a higher than 50% chance of a rate hike in July. But what I thought was interesting is that now they're talking about that they're forecasting that the median forecast is like 5.6, and they're forecasting in 225 basis point hikes. That kind of caught me by surprise. And then you had like more, they were saying, I forgot how many, participants, but there was even one person who was forecasting like in a full percentage point higher, which I think is loony. But that just kind of caught me, by surprise today. And he was continuing to double down on, that they're going to stay focused on the 2% target, but I don't necessarily know if that's going to be achievable. Somewhere between 2 and 3 is probably going to be, where I would think they would settle out. But, kind of caught me off guard there with them talking about 2 more rate hikes, but definitely interesting for sure.
So was that our initial dip? I had stepped away, so I missed part of it. I saw our initial dip, but that was the reason why. Because is that the reason why? Is the question?
Yeah, that was it. That was the reason why. And then they bought it all back up,
Yeah.
right? And then he made the statement that there will be no rate cuts. That nobody in the room is looking to do rate cuts by the end of the year. Then we got to dip back down, basically to right where we were before the rate announcement was made. It's like he also went on to say, Kang, that Fed futures fund, whatever that thing is over there, they're a bunch of idiots and don't pay attention to it because he sure as hell isn't. It's like he basically said that it's insignificant to him. I don't know.
For me personally, I'm taking the longer view here. I mean, we are getting into a seasonally slower time of the year. We all know that summer, when you take out COVID, I mean, when people were off for COVID, that was a little bit different in the summertime. But, history shows that we're going to get into a period of time here this next quarter where, the volumes are going to be lighter, the markets are going to be thinner. For me personally, like the things that I kind of see on the horizon are just in the fall. Fall can be more of a volatile time. We also have the student loan repayments that are going to start to come due in the fall. So I think that can definitely put a headwind in consumer spending. So I'm not saying that that's going to derail things, but for me, I'm kind of just playing the trend. Now and through the summertime. For me, I just am taking a longer view into the fall. I think that it could get interesting when we get to the fall.
I agree with that. Summertime is typically a little bit slower, definitely more volatile in the fall time.
Yeah, I think all of those things are true. But it's like the one thing that is certain is that the market has look. If my bottom line in looking at the price action going into this and the price action after this, and tomorrow's a new day, so maybe I'll be proven completely wrong. But the market believes that they have the Fed by the balls, like truly gripped, like in an iron fist. They know for sure that if the economy starts shaking too much, that if there's too much downturn, that the Fed's going to step in. They've done it every single time. They did it with the banking crisis, no problems. 1-800 cash call. You got a bank, you got problems, call us. We'll hook you up with cash. We haven't had another bank fallout since then. It's like you go and you look at what he's basically saying. Yeah, we're anticipating 2 more rate hikes, right? But the market's looking at it as like, no, you're not. You're not going to do it because in order to get to where you want to go, you're going to destroy the economy. And you're not going to do that going into an election cycle either. Right now, the markets have him absolutely strangled out, and he doesn't know what to do. I think that's why he tried to walk this delicate line. But as long as the market believes that they have Powell on the ropes, that they have the Fed on the ropes, we will continue to push higher. Flow looks that way. The charts, you can't find a bearish narrative on any chart out there. I don't care what it is, other than being like, it's a little bit extended. There's not a bearish setup anywhere other than it being extended. And something being too much, that's the eye of the beholder.
I mean, the only counter to that, I would take the other side. I don't see any really bearish setups out there, so I agree with you there. But I do think sentiment is stretched. We're seeing we're deep in, or we're not deep. We're kind of toward the middle, or getting toward the middle of fear and greed. You do see some mania in a few things. Do I think AI is transformative? Sure. Do I think that it's going to do a lot of good things for us in the long term? Sure. But I think the market's getting somewhat over its skis here in the short term. So, I just think that personally, I think sentiment is stretched. We're up here knocking on the door pretty much of 4,400. I just think that, some of this has to be tempered just a little bit. And who
Yeah,
knows?
can
Again, we could continue this through the summer. We may get it in the fall. But you know, I don't necessarily see the bearish setup. So I agree with you there. But I just think that the market is definitely out over its skis, and you are seeing some decaying uh, data under the surface. And if we get any kind of black swan, or if we get any kind of shaky data point or narrative that comes out of anywhere, then I think it could definitely put a dent in this market.
The only
I
thing I
wouldn't
can
mind.
say, yeah, I think we're moving on to the next segment. I'll touch on that on one of the other pieces.
So we'll get on into the next one, and we'll talk about where that money is. We like to talk about where the money is flowing. And so, what are you guys seeing? Where is the money flowing nowadays?
So, at least for myself, everything is very bullish as far as flow is concerned. Are there a couple of bearish plays in throughout there? Yes, but most of flow overall is leaning bullish a lot. It's still not the flow I want to see. It's all very short dated. This week expiration, next week expiration, which may be typical with it being an FOMC week. So I'm actually I just kind of just want to see what happens tomorrow and through the end of the week. Also, we have a 3-day weekend, so maybe even going into Tuesday, Wednesday of next week, just to kind of get an idea of if flow is going to loosen up a little bit. I think there's still a little bit of movement into IWM and IWM names, but for me, it's just a be patient game.
I think being patient is correct, and being I think lowering expectations to where you get your percentage, you kind of move on in a lot of ways when you're trading this, because that's what they're doing. The flow into Nvidia has been absolutely just neck breaking to the upside. You can't get past it. You can't ignore it. The money is pouring into AI, anything AI. faster than you can possibly imagine. And I understand why, because it's so deflationary and it's so critical to overall margin. It's like it's happening. It is absolutely happening. Um, Again, so you have action in there. We've seen a little bit of action, kind of playing around hospitality, a little bit of cruise line, a little bit of airline, just little tidbits here. We've seen some basing in some banks. So maybe we get an upside moving in some banks. The bottom line is this: flow is bullish. When we get call flow coming into Nikola, they're buying anything and everything. Nikola, it's like at a buck or like 8 cents or whatever it is, and they're banging calls. If they're doing that, they're buying everything. But the only thing that I'll say to that, and we've seen that, and Charlie will speak to it, and a lot of people will speak to this, when they start throwing money on anything and everything, it's a matter of time before we get a little bit of a shake. And maybe the shake. I still think they need to digest today, but maybe we get a shake.
So here comes the next part of the segment here, next part of the show. Shag, Mary, Kill. So what are y'all shagging? What are y'all shacking up with, or what are you getting away from?
So I think I'm going first, and Hell's gonna laugh. I've got cautious shag on Nvidia. And if you take a look at that chart, Nvidia has been on absolute fire. You'll see that gorgeous climb right into ER. You'll see the gap up post ER, and surprisingly, Nvidia is holding that gap well, at least for now. I'm not currently in this one, but if I were to see um, some longer dated flow at an attractive spot, meaning I don't want to buy it up here, but if we were to get a little bit of a pullback and I were to see some attractive flow come in, I would more than likely buy that. So right now it's a cautious shag. I'm waiting for flow and a little bit of a breather.
Yeah,
What
look, I've been wrong on this one in the past, where I've kind of jumped the gun trying to play a setup there. I mean, the tailwind is definitely behind this one. You know, I personally I'm with you. I'm a little cautious here. I mean, I had a huge run today. I'm a little cautious, and it's just for my own risk profile. I'd like to see it take a little bit of a breather before I pull the trigger on in either side. It's too dangerous to short it given the recent run, and kind of the sentiment behind it. But I think it's kind of hard for me personally to take this one long. So I'm kind of on the sidelines with Nvidia.
Flow continues to be bullish. If there's half of a red candle, they buy it faster than you can possibly imagine. They're begging people to sell it so they can buy it. It's like that's Nvidia, but it goes back to Nvidia is Tesla from a few years ago. It just is. And so you're not going to be able to put some type of psychological or fundamental on this thing and be like, oh, that makes sense. It doesn't make sense because Nvidia is going to drive this thing, this AI boom for the next 5, 10 years, and there's nobody that can stop it. There is nothing that can stop this AI revolution other than some type of legislation, something along the lines that limits it in some capacity. Europe is kind of playing with it, but even when Europe plays with it, you don't get a dip. The only dip that takes place gets bought in 8.7 seconds, faster than you can possibly imagine. Can that slow down and stop? Sure. Did Tesla have days when it was up 50 points and down 75 points and up 100 points the next day back in the day? Absolutely. But the overall trajectory was to the upside. You can't get in front of this thing. You can't. It's like you might as well just sit there and put your life savings into it, close your eyes, wake up in 2 years and be like, wow, I got $1 trillion. Joking 100%, but that's NVIDIA. That's the technology. I can't get in front of that thing. Can't get in front of it. Love it. Love it. All right. This is my bottom picking skills right here. I'm gonna try to pick a bottom like I did with SoFi and kind of pick a bottom over there that I did with Intel. Both of those trades are still on and working very, very well at this point. Bank of America, that looks to me to be a kind of sort of maybe a little double bottom over there. And it is kind of grinding higher. We are not seeing put flow come into banks any longer at all. Ultimately, the real test is when it gets to that 30, 30, 50 mark to see if it can actually accelerate to the upside from there. But banks have been absolutely trash. And if the market is going to continue to move, like Flo is saying, the market will continue to move, banks are going to be a big piece of that catch up trade. So I am in it. The trade at one point today was up about 10, 15%. Didn't look at it after hours. because of all the volatility over there in the Dow. We'll check it tomorrow. But Bank of America, I'm long out to, I believe, October or September. I think October.
October, I think, right?
Yeah. Yeah.
Yeah. I'm gonna shag
Gives
this
me
one
two
with you.
ERs. Yeah.
I'm gonna shag this one with you at least up until the next ER. I think there's potential for it to move. If I'm playing banks, which I don't, banks are not my favorite to play. I will play them, but they're not my favorite. I prefer personally like a JPM or a Goldman or Morgan Stanley. But Bank of America is very heavily traded and it can move. So I like it ahead of the next ER to shag.
Yeah, you know, actually, I line up with you guys. I would shag this one too. I like it. I would just say, hell's there picking a bottom, man. Just make sure you got some medicine handy. It sounds interesting, but but I would just say though, just joking. But I would just say, the last time I really traded this one was back during the GFC when I got it for like, I think it was like 450 or $5 in some commons. I haven't really traded the banks that much. I'm with you, Maria. Like if I'm going to trade the banks, it's generally going to be JPM. Is usually the one that I would mess with. But I do like the setup here, so I think BAC could be pretty good.
It's like hell. If Carvana can double in a week, it's like Bank of America can go up 10%, right? It's like
Yeah.
it seems
Yeah.
fair enough at the end of the day.
I'll go through mine quick, and I've been this way before. When we were prepping for the show, we kind of got these things in prior to the Fed. Cash. I mean, didn't know what the Fed was going to say today. I can't, put anything on here. I think market has ran a lot. I mean, I was looking at my charts, and I mean, we just crossed over like 4,300. I think it was Friday. So now we're up here knocking on the door close to 4,400. And yeah, again, I would just go back to the whole AI thing. I mean, yes, AI is going to be transformative, but when you get to the point where you hear everybody singing AI, 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 and you got somebody saying AI like a zillion times in 10 minutes, I think that's kind of concerning. So for me, it's been just a little bit of cash. I think the market is due for a little bit of pullback to trend. So, I'll have a pick probably next week, but at least prior to the Fed, it was going to be cash for me.
Yeah, look, maybe it actually pulls back, but it's like we were saying they would pull back at 400, at 420, at 430, at 440. Maybe it hits 450 and it pulls. It's like that's kind of it's kind of where we're at. It's
I've been shagging to the upside. Like I've been, shagging to the upside on my own. So it's not like I'm sitting there looking at charts and waiting. But as far as recommending something to someone else, I personally I just can't because I'm not in anything that I would want to put out to shag other than
excellent.
cash. All right, folks. So we love to hear from you guys every single week, and this week is no different. We do have a viewer question from Full Moon C, and they are asking, "I'd like to learn more about scaling out of options. Do you wait for a technical level on the underlying, or do you ride some out for max profit?" So what say y'all?
At least for myself, I can say, it depends on the ticker and what's actually going on in the market. So it can change from ticker to ticker. But for the most part, I like to sell into resistance. If I have a sizable position, I'll take some up at the first area of resistance that I see, and I'll let the rest ride to see if I can get a little bit more. If I get another leg up, I'll take some more off, and continue to do the same until I'm out of that trade. Now, that's how that works. Does it always work that way? No, there are times where you look at a chart and you might have to get out of three-quarters of that because that's the confidence that you have in the ticker to continue that next leg up. So it's very ticker specific and market specific, but as a general rule, I sell into resistance, and if I'm scaling out, I will sell a portion and then let the rest ride, sell a portion, let the rest ride until I'm out of that trade.
Yeah, everything you said, and I think you're right. I think it depends. I think part of it is going into what's your plan going into the trade. Obviously, if you're going to go into a trade, you have a target that you're looking at. Did you achieve your target? Did you get halfway to your target and take some off? Did you? It's like, what is your plan going in, and let that be the barometer. The other thing with flow is, it's like if flow got you in, are you watching the lines that got you in? Are they coming back in on the bid? Are they moving off of those? That's another piece of it. I think the biggest mistake that people make is being like, I need to leave runners on. I need to leave runners on. They fall in love with the position overall in the moment, and we're all guilty of it. I've done it a million different times, without understanding the fact that you can get into a different strike and expiration. Like you can sell, right? And you can wait a day or wait an hour or 10 minutes, whatever it may be, and go ahead and move into another position and roll. It's like there's just a million different ways to do it without falling in love with something. And sometimes we fall so in love with that position. It's like, oh, it's up 20, 30, 40, 80, 190%. What? And you end up taking like 50% on the trade when you get a red candle. So know what your plan is. Know what the plan is and try to execute the plan and stay disciplined. That's the only thing I can really offer.
Yeah, I would say for me it's purely technical. So I have a once you get into the trade, I agree with you guys 100%. Have a plan. For me, it's usually just I'm not looking at percentages or P&L or anything like that. It's really just kind of scaling out along the way, you know. And of course, then if I'm using a moving average to act as support or resistance in the trend, if it crosses that, you know, breaks up or down depending upon which way that I'm trading. If it goes, you know, over that and I'm moving that stop down, then I'm out. But as long as that's continuing to work in my favor, then I like to trim, you know, and cut into strength. So when we get stretched, of course, if I'm trading to the upside, if you get stretched in the trend to the upside, I'm going to take a little bit of it off and watch it pull back down to the 21 or 34 and see if it's going to bounce. And then, of course, if you get the bounce and it moves back up, then I'm going to trim some more, you know, into the next leg up, and just kind of repeat that process along the way. And then, of course, when it breaks down in that case through the 21 or 34, whichever one that I'm using as support, then I'm out. But I agree with Hells. You know, I think sometimes we get so wrapped up in it, and everyone's guilty of that, right? You know, just you just got to be very strategic and disciplined and taking those profits. But definitely, folks, if you'd like to email us a question in the future, we'd love to hear from you. Just send us an email at BlackBoxBeat at BlackBoxStocks.com. We'd love to hear from you guys. And I hear the music, so we know what that means. That brings us to the end of our show today. Love to have you guys with us. That wraps up this week's edition of Black Box Beat. Please like and subscribe on our YouTube page and hit that notification so that you can get notified when we go live in the future. So this week, everybody, that's a wrap. Hopefully y'all learned and earned, and we will see y'all next week. Stay green, everybody.
Bye.
So have a good night.